pre-investment checklist is I looked at great minds of investing who had had investments they made that didn't work, but where the reason why the investment would not work may have been obvious before the investment was made. So, like, for example, Berkshire buying Dexter shoes, right? I mean, the concept that low-cost foreign manufacturing may impact the moat should have been visible to Warren and Charlie. It was not that hard to think about that. And so then I would add that as a question to the checklist, that if this product were manufactured in another country, could that affect the moat? Could that affect the profitability, et cetera? So like this, I looked at many investments that had failed by great minds. And then I recategorized them into different buckets. And it was really interesting because the number one reason for business failure, when I finished all the work on recategorizing them, was the number one reason why investments did not work was leverage. The single greatest reason why investments failed was because the businesses were levered. And the second reason why the investments didn't work was some misunderstanding of the nature of the moat. And then, there were other issues, trade unions and different things, but these were the two big ones. Like either the moat was not properly understood or the leverage is really what did the company in.
So the next one is about staying within the circle. So the circle of competence is a core principle in your investing style. So how do you define that circle today? And what practices helped you stay within it, especially as new industries and trends emerge?
Yeah, I think circle of competence is a wonderful tool that Graham and Buffett and Munger have emphasized and stressed for a long time. And there are a few interesting things about a circle of competence. The first is, if you ask the question, if something is within your circle of competence or not, you already answered it. To ask the question is to answer it, which is, it's not. The fact that you're questioning that, is this something in my circle of competence, means it's not in your circle of competence. The second issue with the circle of competence is that we don't really pay much of a penalty if we have a very narrow circle of competence, very small circle. So people are always trying to broaden their circle of competence, but quite frankly, you could always have a narrow circle of competence and do extremely well. And the most important part of the circle of competence is not the size of the circle. It's staying in the epicenter. That's the most important, is staying in the epicenter of the circle. So if we look at most entrepreneurs have a very narrow circle of competence. They are an inch wide and a mile deep. And if they were not that way, they would not be able to build successful companies. So most entrepreneurs don't know a lot about many things, but they are able to do extremely well because they know a lot about what they are focused on. So that works out well. So staying within the circle, being in the center, it's a natural process in investing that over a lifetime, the circle will expand. It's just if you're reading and thinking and, experiencing different things over time, you'll understand more things about how the world works, and so the circle will expand. So we don't need to have some deliberate endeavor to expand the circle. It'll expand naturally. And we also need to be very clear on saying no very quickly when something is outside a circle. It's a big exercise in humility. So Buffett has this too hard pile box on his desk. It's a physical box that says too hard. And he says that 99% of stuff should go into it. So most things that we encounter from an investing perspective should go into the too hard pile. They should be outside circle of competence. And we should not be trying to figure everything out.